Winding down. Let's get started. The audience and our viewers are waiting with bated breath. Mr. Tulsian, we'll start off with your first call, and it's a very interesting one, I thought. CG Power, a company that's gone through the motions, split its business into different verticals. Is there a big turnaround in the works? What are you expecting from the performance going forward?
See, actually, this company did a mistake of foraying into the overseas business, and that was the biggest mistake they did in 2007. In fact, their domestic business has been doing quite well, and having realized that mistake, the company has started, in fact, monetizing all the overseas assets, maybe for the last 3 years, 2014, and now that seems to be coming to an end. They sold their Ireland unit, Germany unit, Brazil, US, everywhere, except for Thailand, the transformer making unit, which has turned around and now contributing in a big way. So practically, if you see pending amount to be received, because many of the deals having concluded in this last maybe 6 months or so, so still they have to receive the money from the buyers of those units. And if one sees the financials of the company of 30th September, you will find that on a net-off basis, it's a debt-free company, maybe with some cash in their hand. And now companies totally focusing on the Indian business. And as I said, that the Thailand business also, because which is a profit-making. If I just quickly go through, they have a very strong presence in power system and industrial system. And now the two areas, one is transmission and distribution, and second is railways. We all know that railways are now migrating from the diesel to electric locomotives. So and there the company is enjoying a very good competence, and that is going to give them a very good leeway going forward. In fact, an order of about 111 crore has already been received from the railway recently in last 1 month by the company. If I quickly go through to the financials, company has already posted a standalone income of closer to about 2,600 crore with EBITDA of about 250 crore. And interest, as I said, that major amount has been received in the second half, or maybe is going to get received. Now the interest liability was 106 crore, and in spite of that, company had a PBT of 85 crore and PAT of 70 crore. So going forward, I think maybe from FY19, I'm not banking too much on FY18 because that is more for the balance sheet cleaning. This can really see stock is seen to be at an inflection point because of their core competence and focus on the domestic market. So taking all this into consideration, equity is also seen to be quite low at 125 crore. And if I take the market cap and EV, because as I said, it's a debt-free, it's about sub 6,000 crore. And generally, if you take a comparable peers, maybe like ABB, Siemens and all that, they always rule at an EV to sales of about 6 times, maybe 5 to 6 times, while this company is ruling at an EV to sales of 1x. So tremendous potential going forward from FY19 onwards. Promoter stake is 35%, but the institutional holding is at 52%. So taking all this into consideration, one can keep a target of about 115 in year 2018 on the stock.
All right, so that's the first pick that's coming in from Mr. Tulsian. Watch out for that one. CG Power is the one that we're talking about.
We're 4 down. Let's move to the next round then, and I'm going to come back to Mr. Tulsian. Mr. Tulsian, the next stock that's on your list is Akshar Chem. Interesting place, specialty chemicals. I was trying to do whatever little reading I could after the market. So vinyl sulfone, I believe, is a big product for them. What could be the triggers here for this company?
No, in fact, I would say that the company has 2 product profile. One is dyes and pigment, and second is dye intermediate. If you take the dyes and pigments, CPC green, CPC blues are the main products. And if you take dye intermediates, then vinyl sulfone forms the big this one. They are in fact foraying into the H acid also, which is again a dye intermediate, plus they are foraying into precipitated silica also. Under the expansion, company is carrying out an expansion of about 175 crore, which should get completed maybe in 6 months' time. And in fact, in spite of such a big capex, company will remain a debt-free, because for the simple reason that they raised about 69 crores with a QIP, having made in the month of July at 776, and now the share is ruling closer to about 700 rupees. And if you see last year, that is FY17, had a fabulous year for the dyed intermediates, largely because of the price increase in the prices of like vinyl sulfone, H acid, J acid, gamma acid, and in fact many of the players, pure the dye intermediates, have really shown excellent numbers. So while comparing YOY, in spite of company having posted an EPS of 21 rupees for H1, the share price has corrected, because obviously market had a disappointment because there was a drop of about maybe 50% in the PAT, and the share corrected from a top of 990 to the present level of 700. But if you see the theme for going for the dyes intermediates and dyes and pigments, both are doing very well. They are the largest exporter of vinyl sulfone from India, having 45% market share. Plus, they are having one amongst the largest producer of CPC green amongst the world, having 10% market share. So once they will be having this expansion completed in next 6 to 8 months, their top line will increase by about 80%, giving excellent operating leverage. As I said, company will continue to remain debt-free. So if I have an H1 EPS of 21, H2 is definitely better because of the increase seen in the realization and margin of dyes and pigments and dye intermediates. So take 45 rupees as EPS for FY18. For FY19, I think that will be a real big explosion in earnings. And I won't be surprised to see an EPS of about 75 to 80 also for FY19. And that will really be a big kicker for the company to post growth in its top line as well as in bottom line. Maybe top line will show a growth of about 60-65%. Bottom line will show a growth of about 80-85%. So taking that into consideration, share can give you a level of about 880 in next 6 months or so, which is now ruling closer to about 700 rupees.
Okay, all right. Get straight to Mr. Tulsian. Mr. Tulsian, you're looking at a cement company. Give us details there. What's the target price?
In fact, we have been keeping extremely bullish view on cement. And in fact, I won't be surprised to see the average capacity utilization, which is now seen at around 70% across India, will get increased to about 85%. And in that theme, JK Cement, in fact, what is happening, market is giving good valuation to the companies having capacity of 10 million ton. In fact, there are 3 layers, 10 million, 25 million, and 50 million. And 50 million and above only falls one company, that is Ultratech. And there are many companies in the 25 million space and 10 million also. So if you take a call on this company, they have a 10.5 million gray cement capacity. Apart from that, they are into white cement also with a capacity of 6 lakh ton per annum with a 45% market share. And if you take a call on white cement, it's a duopoly market. Only 2 players are there. One is JK Cement, second is Ultratech. Apart from that, they have the wall putty of 7 lakh ton per annum. And in fact, the financial performance for the first half, generally, cement companies are posting an EP, whatever earnings of about 33 to 40% in first half, and with not a significant growth having seen in any of the companies for this H1 FY18, if I really take a call. But this company has shown extremely better numbers for H1 FY18 over H1 FY17. And if I just take a call, 15 rupees EPS was last year in the first half, and this year it is 25 rupees. And second half, they had about 25 rupees. So if you take in all about 37, 38 rupees, EPS which they have posted for FY17, they are going to end this FY18 with a EPS of about 60 rupees. Now come on the financials, very low equity at about maybe 70 crore with a face value of 10 rupees, and market capitalization and or the EV is quite low, seen at about 7,600 crore as market cap and EV at 9,100 crore. And that translates into cement per ton capacity at about $110. But the best part is that company has already taken up the capacity expansion to 14 million ton, and that should get completed in maybe next 12 months or so. And I'm expecting that company has given a capital outlay of about 1,500 crore, which translates at about maybe $65 per ton. And since the company has cash accrual of about maybe 900,000 crore, they should be, largely have this entire capex of 1,500 crore from their internal accruals. That means not increasing the keeping the debt at constant level of 1,500 crore. And excellent, maybe for FY19, I won't be surprised to see the EPS moving to about 78 to 82 rupees, which is likely to be at about 58 to 60 for FY18. So taking all this into consideration, share is likely to give a level of about 1370 in 2018, which is now ruling at sub 1100 rupees.
Okay, so that's JK. We've got 6 more bets lined up for you. Mr. Tulsian, I'm coming to your next pick, and that's JP Infra. Very interesting. People are wondering how it will eventually all play out through the courts and through the bankruptcy proceedings. What is the sense and what's the trigger here?
See, take this as a wildcard entry. And if you really take the situation, 2 stocks, I'm not trying to give any comparison. The 2 stocks, one is DB Realty and second is RCom. The moment we have seen any kind of favorable indications coming in, either by way of favorable 2G orders, DB moved up by about 60% in 2 days or 3 days. RCom, the moment we have seen the debt resolution scene happening, stock moved up by about 100% in this last couple of weeks. Now, if I just quickly come on JP Infra, since I have been given just 1 minute, the company has 165 kilometer Yapuna Expressway with a residual concession period of 30 years. Generally, in all road projects, you have a total concession period of 20 years. Here it was 36 years, of which they have completed 6 years. So they have a residual concession period of 30 years. Apart from that, they have 27 crore square feet of land under development at 5 locations. One in Greater Noida, 2 parcels in Gautam Buddha Nagar, one in Aligarh and one in Agra. And if you really take a call right now, affordable housing is the only sector where the tax-free income is allowed by the government of India. None other sectors have that. Of these 27 crore square feet, company has only taken up development of 6 crore square feet, for which the litigation in Supreme Court is going on. Supreme Court earlier directed the JP Associates, the promoter, to deposit 2,000 crore. But then they have reduced that to 550 crore, of which 425 crore has already been deposited. I don't think that 125 crore being the last installment is going to get default by the promoter, that is JP Associates, on 25th January. Apart from that, 20 potential acquirers, you just name who is who, they are lined up to take up this company. They are going to be quite aggressive because 2 portfolio, one is 21 crore residual, this one, square feet of land under development and 165 kilometers. Today, if you all have read the report, about 5,000 flats will be delivered by the group by March 18. Of them, some of the flats are of JP Associates also, some of the JP Infra also. So once you have any kind of resolution seen in sight coming in, you will see the stock just running up. I just gave those 2 examples. The way it moves up on the downside, even on a valuation kind of basis, if you take 500, 600 rupees square feet land development, that is seen to be quite low. So given a target of 24 in the year 2018, but one can even keep a time horizon on the stock till 2018 to see maybe higher gains, apart more than 24 also.
Okay, thanks so much for that, Mr. Tulsian.
Mr. Tulsian, let's come to your last pick, Cineline. Your thoughts?
See, this is purely a real estate company, and if I just go through quickly, they have 9 cinema halls in Mumbai, Thane and Nashik, and all are leased to PVR. So they are getting a fixed annuity income. Apart from that, they have 84,000 square feet of sellable area booked in Kanakia Wall Street. This is again a commercial complex coming on the Wall Street concept, which will get leased out by them maybe for about 15 crore on annuity, and the possession should be given to them maybe in the next about 12 months or so. Third property which they are owning is a shopping mall in Nagpur, which is 90-95% occupied. They intend to monetize, and the amount which is estimated to get realized is about 250 crore. In fact, if you see amongst the realty space, generally, either they don't have the earning or they are over-leveraged. But in case of this company, they have consistent EPS of 4 rupees on an annualized basis, and the debt is just 130-140 crore, with market cap of 310 crore, EV of about maybe 440-450 crore. And if you take the conservative valuations, because as I said, 9 cinema halls are all going to get developed maybe every couple of years, one or the other property, which will keep giving them the further monetization of each property as well. So the net present value of the properties, insiders or maybe the experts are estimating to be at about 1,300 crore. Promoter stake is quite high at 70%. So taking all these into consideration, share now ruling at 109 can be looked to have a target of 136 in the 2018.